Hello everyone. If you want to go to my free course, type henry-ward.co.uk into Google, then go to Henry Ward Trading, and then this here is my free course. Click on Start Today. If you want to go on to the webinars that I do every Sunday and every Wednesday, click on Trading Academy and then click on Start Today. So this is the Trading Academy. This is the full training, the webinars, direct access to me, everything that you want. Hello everyone, how are you? So something I wanted to go through today was Crocs. Some of you will be aware of this, some of you won't be. So Crocs is something that we have traded over the last year, maybe year and a half. We didn't massively invest in it. What we did is we traded on CFDs. Now, some will love them, some will hate them. Look, they look awful. And what is going on here? Balenciaga Croc. But these are an awful pair of shoes that are unbelievably comfortable. Okay, so if you've ever worn them in your house, they look horrendous, but they are so comfortable. Okay, so they seem to be taking the world by storm at the moment. Now we go over here to eToro and look at the investments I've made in this here before. We have two investments. We jumped in it before and the 11th 2022 and also bought it on the 8th 2022. So we have bought into this on a couple of different occasions. Now since we've sort of bought this, look what happened. We're up 40% on this one, or 40 quid or 20%. This one we're down 3%. Okay, now this is something that I do think will continue to grow year on year over the next 3 to 5 years. So this is something that I am happy to talk about, happy to be long-term looking at. This is something that I expect massively to continue growing over the next couple of years. Now we go over here and have a look at Crocs. So this is where we were trading Crocs sort of last year, 2020 and 2021. We're trading it every time we hit this sort of level, we traded it off those sort of levels. Now since then we have had a huge pullback in this. So Crocs at the high was 183, down to the low down here it came down to $46, which was a phenomenal drop. If you look at this, that is a drop of 74%. Now at that particular point, for me, this shows unique value. This shows unique value in the sense that for me there is loads of upside on this particular stock. Okay, so from where it was, it's already gone up 120%. So since the low here, which was July 2022, so July, it's already gone up 120% this year. So this, if you look back at some of the best performance stocks, they've done 100 to 120%. Well, sorry, the top one I think was about 300% when we looked at it, but some of the other ones were down as far as 50%. Now we understand that this has dropped massively and now it's taken off, but from this low, look at the sort of run we've had on this particular stock. Now, do I expect this to go? Absolutely. Do I expect this to continue going? Yes. Now, there's a couple of main reasons for the likes of this. Now, I'm going to show you visually here. So, look, if this comes back down to this level here, which depends on the likes of the NASDAQ market and the S&P and the Dow, whether they're going to drop. If they're going to drop, yes, Crocs will follow. If they're dropping, Crocs will follow. Absolutely. Yes, they will. But if we're looking at the likes of these stocks and the stock market doesn't have a massive tumble, and it sort of stays where it is, I'd expect this to slowly continue growing. Now, one of the big things that's hit the market at the moment is if we have the looks at the likes of, we'll just start at the top. Apple, okay, earnings have been good. Facebook, good, 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 negative, good, negative, negative. Amazon, good, good, negative, good, negative, negative, good. Microsoft, good, 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 negative, good. Google, good, 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 negative, negative, negative. Netflix, good, negative, good, 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 good. So this is similar. The turn on Netflix is similar. And then Tesla, lastly, good, 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 good. If we have a look at Crocs, we can see here good, 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 good. So it means throughout this time, when we have the likes of Facebook, the likes of Microsoft, the likes of Amazon, the likes of Google not doing so well, the likes of Croc have. And if we look, 31%. We're just going to look at the earnings per share. Revenue is good as well, so that's pretty decent. But 31% higher, 68% higher, 40% higher, 31% higher, 8% higher, 31% higher, 19% higher, and 13% higher. So these earnings that the Wall Street are expecting these guys to hit, they're not just hitting them, they're absolutely smashing them out of the water. And that's one of the key things when we're looking at a stock. Something that's really, really important. Now, don't just take my word for it. Have a look at what some basic, I'm not going to go into too much depth here, some basic things that people look for when they are looking at a good company. Now, one of the best investors in the world, Warren Buffett, always looks for stocks in around a P ratio of 10. Now, I understand this is very old school trading, but if we look at here at the P ratio here, it's 10.47. This means that this is, in that sense, it's an undervalued stock. Now, obviously, that is very different. And as far as you know, if you look at the P ratio of the likes of the S&P, the average one is 25. Okay, so it looks like there's huge upside for this just by looking at that main metric. Okay. And our market cap is 5.7 billion. Now, if we look over here, and we look on year. So if we look at 2018, look, we can see here there's a 20% rise. Again here, about a 15% rise. And all of a sudden here, we almost have 100% growth from 20 to 2021. And again, from here, we almost have 100% rise again. So I'd say I'll say 70%. So about a 70% rise there on that. So we can see there that the revenue is continuing to grow. Now this is the trailing 12 months. Okay, so this is not exactly correct. We'll have to wait till we'll have to wait for another 2 weeks to find out. But this will be very, very close. Very, very close. So there's little things that are pointing that this is a very good stock. This is something that we should have in our portfolio. So if we go on over sort of into balance, okay, so that is the main page there. Then we go into financials, which is here. And then that's income statement, so there. And now balance sheet. So if we go into the balance sheet and have a quick look. Now, if we have a look at the very top up here, we have the breakdown of assets. But if we scroll down here, there's two sort of things I wanna bring your sort of eyes to. So total assets, 1.545. And if we go down here, total liabilities 1.530, which means it actually has more assets than liabilities. Look. So this means that this company, if you got it in the morning and just broke it down and sold off all its assets, the company would be worth more than it is currently, if that makes sense. And that's something that's really, really important when you're looking at good investing in companies. Now, yes, we look at a lot of growth stocks. Okay, that's one of the things that I like to look at. Growth stocks that we hold on for 3 to 5 years and then we get rid of them. Is this here a growth stock? Absolutely. Is this a long-term investing stock? Absolutely. We could be looking at this as a lot more longer term. So we can see here that this has growth, which is on the stock. It has growth because it's revenue and it's growing. It also has the growth in the sense that it's becoming more and more mainstream. You have big brands like Balenciaga. I know Balenciaga haven't had some good sort of advertisements as of late, but little things like that are adding to the footprints of the likes of Crocs. We're starting to see them everywhere. We're starting to see them on high street, and we're actually starting to slowly see people wearing them outside, which is when things start to really take off. Yes, I understand most people wear them in their home. It's snowing outside, and I wouldn't dare wear them outside. But little things like that are going to add up, continuing to grow. So for me, if we get a pull back into the, say, the $86 area or region, or even down to the $69, any of these areas are buying, for me, are buying zones. If it comes back down to this area here, around the $46, $70, $50, in around that area, absolutely, in my opinion, I will be looking to buy a bucket load of it if it comes back down into that area. So for me, this is probably one of the best stocks that we've looked at in a long time, in the sense that this has long-term longevity, whereas most of the other stocks we look at is just sort of growth that we're looking to ride the crest of that wave and then get out at the very top. Whereas this could have growth for the next 5, 10, 20 years, depending on how this company evolves, depending on how much of a brand it builds. And that's the main thing. It's like building a brand, building something for themselves. So this is something that I wanted to go through with you guys. Won't be going through the rest of the stock market. It'll be just going through the likes of Crocs here, but it's definitely something that is worthy of a look. And thank you very much, everyone, and hope you have a lovely day.